My name is David Winch, and I'm a forensic accountant with Bartfield's Forensic Accountants. And in this session, which will be around about 30 minutes, we're going to talk about the available amount in confiscation, particularly with relevance to the Section 16 statement and how we deal with available amount. So let's kick off with the agenda. Is the available amount the amount which is available? How should assets be valued? What about costs of sale? Third-party interests and Section 10A determinations, and that's going to be fairly brief because, as you will gather, I'm not a big fan of Section 10A determinations. How to challenge tainted gifts. Where the benefit exceeds the available amount, will there be a finding of hidden assets, and how we can help? Okay, so let's crack on with, is the available amount the amount which is available? Well, the short answer to that, as I'm sure you know, is no, it isn't. It's another one of those phrases that turn up in confiscation law, like benefit, like criminal lifestyle, that just don't mean what the man on the proverbial Clapham omnibus, the man in the street, would think that they mean. Then they're not used. The term available amount isn't used in its ordinary English usage. It's used in a technical sense. The available amount is defined by Section 9, and of course all the references here are to the Proceeds of Crime Act 2002. And just to be clear, we are talking about the Act as it applies in England and Wales. So Section 9 sets out what is meant by available amount. And to put it into English, it includes the current value of all the defendant's interests in assets at the time the confiscation order is made. So it's his assets now. And then added to that is the value of any tainted gifts he has made. And we're going to talk quite a bit later on about what we mean by tainted gifts. Generally, and there are some specific exceptions to this, like fines, but generally no deduction is made for any debts or other liabilities of the defendant. And again, there's a caveat to that, which we will get to. But when I said it includes the current value of all the defendant's interests in assets, it is irrelevant for this purpose, for available amount purpose, whether the assets were acquired legitimately or illegitimately. So even an asset which is demonstrably untainted by any criminality, which belongs to the defendant, will fall into his available amount. Now, you'll be aware from a fortnight ago when we talked about benefit that there is a statutory assumption that any asset held by the defendant after the date of his conviction can be assumed to be benefit. And of course, when you're looking at that, then it is relevant if an asset can be proven to be demonstrably, legitimately obtained, because then that will rebut the assumption and it won't fall into benefit. But it will still fall into the available amount. Remember, this has nothing to do with the realizability of assets, so that it doesn't achieve anything in terms of available amount for the defendant to be able to show that in order to realize the equity in the house he lives in, he's going to have to throw his family on the street. In that sense, doesn't matter. Again, the position is slightly different in Scotland, but we're talking England and Wales. Doesn't matter that he can't readily realize the money in money terms that is represented by, say, the equity in a family home. Doesn't matter if he's got a share, and let's say a minority share in the property, and the other holders of the property say, we're not going to sell. And therefore he's got real difficulty in turning that interest in a property into money to pay a confiscation order. Doesn't matter, any of that doesn't matter in calculating the available amount. And remember that the period allowed for payment is initially 3 months from the date of the confiscation order, with an extension available for a further 3 months. So it's no more than 6 months after the date of the confiscation order. But even so, you don't consider quick sale values, you don't consider fire sale discounted values. You make no allowance for that in calculating the available amount at this stage. Now, later on, when assets have been sold, there might be a Section 23 application to vary the confiscation order, but we're not dealing with Section 23 today. Deductions are made for secured liabilities. And the reason that a secured liability does affect the defendant's available amount, say a mortgage on his home, is because the lender acquires an interest in the property. The secured lender has an interest in the asset to which his security attaches. And that interest of the lender reduces the interest of the defendant. And that is the mechanism by how the secured lending is taken into account in calculating the available amount. So you are looking at the defendant's interest in the property, and that will be reduced by the amount of an outstanding mortgage, for example. But no deduction is made for other liabilities. So if the guy has credit card debts, gambling debts, owes his butcher and baker and candlestick maker money, doesn't matter. All of that is ignored in arriving at his available amount. So that can mean that if the court takes off him his available amount, requires him to pay his available amount, then there may be other creditors of his who he's unable to pay subsequently. But that's the way confiscation works. The only exception is debts which would have priority in a bankruptcy. And they are typically things like wages of employees of the defendant, which is not, as you can imagine, something that happens a lot in practice, or taxes which he is holding because he has effectively collected them on behalf of HMRC. So, for example, VAT, where he's billed his customers, if he's in business, he's billed his customers for an amount plus VAT. In a sense, he is collecting that VAT for the taxman. And so that VAT due to the taxman is a priority debt in bankruptcy and is a priority debt in confiscation, and is taken into account in arriving at his available amount. But as you can see, it's pretty restrictive. I mentioned the value of assets. How do we value assets? Well, the key rule is that assets currently held by the defendant are valued at their current open market price. Section 79 deals with this. And so if you're looking at his house in which he lives, then you might get a professional valuer to do a physical inspection of the property, put a valuation on it, and put that before the court. That's the ideal. In practice, very often the Section 16 statement will include a value, and that could have been grabbed off an online site, off the internet, off Zoopla or something like that, just to put a price in. And of course, the defendant can, if he's not happy with that value, he can get his own valuations done, and they can be served with his Section 17 statement. Tainted gifts have special rules of valuation. They are valued at the higher of the value of the gift when it was made, adjusted for subsequent changes in the value of money. So if the gift was made, say, 5 years ago, and there's been inflation of 10% over the past 5 years, then you will value it at that time it was given and up it by the 10% to cover the inflation. And the index that you use there is the CPIH index from the Office for National Statistics. So you work out that value, but you also work out the current open market price of the property, or if that's not still held by the person who has it, then you look at property representing that property. Okay, so if you have, say, given away a car, let's say you've given away a car 5 years ago and it was worth £10,000. You gave it to your son who still has it. Today that car might only be worth £2,000. How do you value the tainted gift? Well, the current value is £2,000. The value 5 years ago was £10,000. Uplift that for inflation over the 5 years becomes £11,000, 10% added on for that inflation. So you've got two figures, £11,000 or £2,000. The court is going to take the higher of those, which is £11,000. So in a sense, tainted gifts are pretty bad news from a defendant's point of view in terms of available amount. Where a defendant holds a minority share in an asset, say he has a quarter of share in a property, then if you were doing a valuation for, say, inheritance tax or something like that, you might say, right, we'll take a quarter of the value of the whole property and then we'll discount it for the fact that it's a quarter share, and a quarter share is less valuable than 100% share. But in terms of available amount, in terms of confiscation, we don't discount. So if a property is worth property is worth, say, £100,000, and we've got a 25% share in it, then our share is £25,000. It's not £25,000 less a bit for the fact that it's only a quarter share. And there's a case there on the screen. Okay. What about costs of sale? In relation to available amount, the costs of sale may be deducted. And again, there's a case there, a fairly recent case of Lowther from last year. And what we would do then is if, say, the property is valued at £100,000, let's assume our defendant owns the entirety of a property valued at £100,000, then in terms of his available amount, we would say he's going to suffer costs of estate agents and lawyers in selling that. Let's make an allowance for that. Let's say 3% knockoff. And so we put £97,000 in his available amount for that property. As I say, that's what we do in calculating available amount. If that same property were assumed to be benefit as an asset held after the date of conviction, then the whole £100,000 would go in benefit. But for available amount, we were allowed to deduct anticipated costs of sale. And of course, again, if the property is actually sold subsequently and doesn't reach that price, we can look to section 23 to have an adjustment down in the amount to pay under the confiscation order. With regard to taxes, where a tax deduction is made at source, and this happens with pension funds, for example, if you take a pension fund out early, there is a fairly chunky tax deduction, has to be made by the pension fund provider, and only the net amount is paid to the defendant. In that case, the net amount forms part of his available amount because he simply cannot get the gross amount. It's deducted at source, he's never going to see it, there's nothing he can do about it, So the net amount is what's taken into account. In relation to other taxes, though, they're ignored. So if our defendant owns a rented property, it's gone up in value over the time that he's held it. He's going to be able to sell it for £200,000. Terrific, right? Cost of sale 3%, so £194,000 comes into his available amount. What about the capital gains tax he's going to have to pay consequent on that sale? No account taken of that. He's not allowed to make that deduction for the tax, which unfortunately he's inevitably going to be asked to pay after he's sold that. And if he's cleaned out by the confiscation order, he's not going to be able to pay the tax man. Too bad, says the court. That's how it's done. Right, okay, so we've covered valuation. What about third-party interests and Section 10A determinations? You might remember Section 10A was introduced into POCA in an attempt to simplify, if you like, simplify the payment, the enforcement of confiscation orders. Whether it's actually worked to simplify them is a moot point. But the thing to remember is that the court can decide the defendant's available amount, including his interest in shared assets, without making a formal Section 10A determination. Of course, that was the position before Section 10A was introduced into POCA, and it's still the position. The court can just go ahead and say, the judge can say, right, we've got a matrimonial home, husband and wife, joint names on the legal title, seems to be jointly owned 50-50, right, I'm going to take 50% of the equity in that house and include it in the defendant's available amount. And that doesn't involve making a formal Section 10A determination. And the reason why it doesn't, the reason why it doesn't is because the court said Section 10A was introduced to simplify things, not to make them more complicated. It wasn't introduced in order to put an additional hurdle in the way of confiscation. It was introduced in order to provide an additional option for the court. If the court does decide that it's going to make a formal Section 10A determination, it must give anyone who it considers might have an interest in the property an opportunity to make representations to the court, assisted by counsel, if they wish, before making that determination. So that is, in a way, makes things a bit more complicated, I think, in terms of confiscation. And my own view is that it's just simpler just to ignore Section 10A, let the court get on, do what it wants, and then if there are third-party interests that need to be resolved subsequently, deal with them post-confiscation when it comes to enforcement and so on. But that's a personal view, obviously. Okay, tainted gifts. Tainted gifts, well, what a pain tainted gifts can be. How do we challenge tainted gifts? Well, first question is, has there been a gift? Where there has been a gift, and a gift includes a sale at significant undervalue. So let me again go back to the example of you give your son a car. The car's worth £10,000. If you just give him the car, then clearly that's a gift. If you sell him the car for, let's say, £5,000 when it's worth £10,000, then that also is a gift in terms of this terminology. It is a sale at a significant undervalue. Where there has been a gift, then the question, the issue, whether that gift is a tainted gift or not, in most cases, and I'll explain when it doesn't, but in most cases, will depend only upon the date on which the gift was made. So yeah, in most cases, whether the actual asset gifted was actually tainted by criminality will be entirely irrelevant to whether the gift is a tainted gift. So again, one of these expressions that is in POCA perhaps doesn't mean what it sounds as if it might mean. So if there's an assertion by the prosecutor in the Section 16 statement that there are tainted gifts, then what are the issues that we need to address? Well, the issues we need to address are, firstly, was there a gift? A gift will generally involve transfer of legal and beneficial ownership. You would expect that if there is a gift, the person receiving that gift accepts the gift. So there has to be acceptance by the donee. And of course, if something is a gift, you don't just give somebody a gift for 6 months. You give it not expecting it to come back. So there should be no intention that the asset should be returned. If there is an intention that it's going to be returned, then it isn't a gift, is it? It's a loan. So first question, is it a gift? Was there a gift of the asset? And you can argue from a defense point of view, you may have an argument for saying, no, this was not a tainted gift. This was not a gift. This wasn't given, it was lent. It was just a look after this for me while I'm in prison or something like that. And then the question is, was the transfer at a significant undervalue? And we've talked about that in relation to the car. Then we need to know, when was the gift made? Because that's going to be key to our determination of whether or not it was a tainted gift. Once we've established when the gift was made, we have to think about whether the defendant has a criminal lifestyle or not, because there are different rules if he has and if he has not. So where the defendant does not have a criminal lifestyle, then the question is, was the gift made after the date on which the particular criminal conduct commenced? And the particular criminal conduct, you'll remember from a fortnight ago when we talked about benefit, particular criminal conduct is the conduct of which the defendant is convicted in these proceedings, and any other conduct which is taken into account in sentencing in these proceedings. So if there are other offences, if they're TICs, as we used to call them, then they also form part of the particular criminal conduct. So you look at when the particular criminal conduct commenced, you have a date, and then if the gift was after that date, it's a tainted gift. It's that simple. If it was not after that date, the gift is not a tainted gift. So that's the situation where the defendant does not have a criminal lifestyle. Where the defendant does have a criminal lifestyle, then it's a little bit more complicated. Your first question is, was the gift made after the first day of the period of 6 years ending on the day proceedings were commenced? That is, in most cases, going to be the same as what we call the relevant day for the purpose of the benefit assumptions. The first day of the period ending on the day proceedings were commenced, and proceedings typically are commenced when a defendant is charged, but there are rules setting out when proceedings are treated as commenced. Okay, was the gift made after the first day of the period of 6 years ending on the day proceedings were commenced? If it was, then it's a tainted gift, and we don't need to think any more about it. If it was not, then a further question has to be addressed. The further question is this: where the defendant does have a criminal lifestyle, but the gift was not made after the first day of the period of 6 years ending on the day proceedings were commenced, then we have to ask ourselves, was the gift a gift of property which had been obtained by the defendant as a result of or in connection with his general criminal conduct, or of property which represented that sort of property in his hands. So this is the one case in which we look at whether the criminal property was actually, whether the property gifted was actually tainted by criminality. So imagine somebody who's charged with an offence on, let's say, the 1st of January 2019. The relevant period then of 6 years starts, doesn't it, on the 2nd of January 2013. And then imagine that he's made a gift prior to 2nd of January 2013. Is that a tainted gift? Well, in that case, we will only know by checking whether the actual property that is being gifted was tainted. Okay. So if it was, it's a tainted gift. If it was not, the gift is not a tainted gift. A little bit more complex there. Finally, let's talk about the topic of benefit exceeding available amount. Very often the case, of course, that benefit does exceed available amount. Does that mean that the court is going to say, right, there are hidden assets? We're going to make an order that he pay the amount of the benefit. Now, the court may do that, but does it automatically have to do that? Well, no, let's discuss. So generally in the section 16 statement, the prosecutor is going to seek a confiscation order in the amount of the benefit. They just put that wording in, don't they? In every section 16 statement, prosecutor seeks a confiscation order in the amount of da-da, and it's the benefit figure, if that benefit figure exceeds the available amount. So in a sense, that what that is doing is simply reflecting the wording of section 7 of POCA, which says, if the defendant shows the available amount is less than the benefit, then the amount ordered to be paid, the recoverable amount, is below. The inference is that it's absolutely down to the defendant to show that the available amount is less than the benefit. Does that mean then that the court must blind itself to evidence from any other source which would tend to show that the available amount is less than the benefit? No, it doesn't mean that at all, as we will see. The court should take account of and give appropriate weight to all the evidence relevant to the defendant's available amount. And that evidence could have come from the prosecution, could have come during the trial, could come from third parties, could come from bank statements or whatever. The court should take account of all of that and give appropriate weight to it. There may be evidence from sources other than the defendant which show that his available amount is less than his benefit. I sometimes see in section 16 statements a quote from a case from 2000, the case of Barwick, and there's a lovely quote for prosecutors, absolute golden quote from a prosecution point of view, where it says, once the benefit has been proved, it is permissible and ought normally to be the approach of the court to conclude that the benefit remains available until the defendant proves otherwise. When we say prove, of course, we're talking about the balance of probabilities. But even so, what that quote seems to be saying is, once you've got a benefit figure, that's available amount until the defendant shows us that it's not. Now, a thing to remember about that case is that that Barwick case, was a straightforward case of theft of monies by a single defendant. So it was the most simple and straightforward situation imaginable in terms of available amount. The defendant had stolen some money. Had he still got it? That's what the court was saying. The court was saying, well, we're going to assume he still has, unless he can show us where it's gone. And that, on the face of it, doesn't seem surprising. But it doesn't mean that in every case that comes before a court, in every confiscation, the court is going to make a recoverable amount equal to the benefit simply because it hasn't heard anything from the defendant, or it hasn't believed the defendant. Those things do not follow as night follows day. And depending on the facts of an individual case, the benefit actually may not translate into available amount. And you can straight away think of a few reasons why that could happen. For example, if benefit is obtained jointly by two people or two or more people, they jointly obtain the whole of the benefit, each of them. Well, they're not each of them going to have the whole of it as an available amount, are they? No, of course they can't do. Or again, benefit can include, say, a parcel of drugs found on the defendant when he's arrested. Certainly benefit. Is it available amount? Absolutely not, because he's not going to be able to sell them, is he? What about where perhaps a trading standards case where somebody's selling fake Nike trainers or something like that? Well, they will have paid for them. They'll have paid something for them. The benefit will be based on the sales value, but that won't translate into available amount because some of the money has obviously been used to buy the things. And what about a money laundering case where, say, a solicitor has allowed his client account to be used to launder funds, and he's guilty of transferring funds, let's say, out of the country? His benefit is the whole of those funds. He won't have those funds because by definition, he's passed them on. So it's certainly not the case that in every situation, benefit will translate into available amount. That just doesn't stack up at all. So what we need to be aware of is that even where the defendant has zero credibility, quite often defendants do have zero credibility, don't they? Or he fails to produce any evidence in support of his assertions about his available amount, or he even just fails to respond to Section 18 orders, Section 17 orders, fails to engage with the confiscation process, sits there with his arms folded, his mouth shut, and his eyes closed. Does that mean that the benefit, that the recoverable amount has got to be equal to the benefit? Well, no, it doesn't necessarily follow at all. And there's a couple of cases. One well-known is the Macintosh case from 2011, where the court said, no, it doesn't necessarily follow that the recoverable amount should be equal to the benefit. And a much more recent case, a case called Zuman in 2021, I think it was March this year, where Mr. Zuman spent all the confiscation proceedings telling the judge how corrupt everybody was who had dealt with his case, prosecutors, police, investigators, everybody who had anything to do with his case was corrupt. He shouldn't have been convicted, and he didn't see why there should be any confiscation. And the judge just said, well, that doesn't help me at all. You haven't addressed the issues that apply. What you've tried to do is talk about what went wrong at trial. We're not interested in what happened at trial. You had the trial, you were convicted. We're interested here in the confiscation, and you haven't addressed that at all. And the judge made an order in the amount of the benefit. Well, he shouldn't have done, said the Court of Appeal, and they sent it back to the Crown Court to be looked at again by a different judge. Okay, so that's it. I've got a couple of things to tell you about what's coming up over the next couple of months. First thing is, Bartfield's Forensic Accountants, as I've said on previous occasions, is part of the Sedulo family of companies. And what we are planning to do over the next few months is to rebrand ourselves as Sedulo Forensic Accountants, because it just makes a lot more sense when we're part of the Sedulo family. So you will see stuff appearing in your inbox from Sedulo Forensic Accountants. That's us. Same team, different branding. Sedulo offers a full range of financial services for businesses and individuals. And we undertake legally aided and privately funded criminal and civil forensic accountancy work. And we have a team of experienced and highly trained forensic accountants, analysts, and support staff. And one of the things that we are going to be doing is from next month, starting indeed on the 7th of October, we are going to be going back to doing live presentations, face-to-face presentations. So 7th of October in Leeds, we're going to talk about dissecting POCA. And then in the 14th of October, we will be doing something similar in Liverpool. And you should be getting details of those in your inbox. So the webinars that are like this one won't be happening, but the live events will. And do please get along to those, and we would love to see you there. The team will be there. It won't be just me. It will be my colleagues who will be presenting, and we're hoping to get some lawyers along as well. We do operate from offices in Leeds, in Manchester, in Liverpool, and London. As I said, 7th of October in Leeds, 14th of October in Liverpool. They're in the calendar now. You can get more on this and other topics, of course, on our website. The Bartfield's Forensic Insights News has blogs, and this and previous webinars can be found on the seminars part of the website. Of course, if you want to get in touch, please do email me. My email address is there. I would be very happy to hear from you and will help in any way I can. The phone number is there as well. I have to say I'm a bit more difficult to get on the phone. So thank you very much for your time, and I'll hope to see you in Leeds or Liverpool next month. Thank you.